You like, but you don't love stocks. What do you mean by that?
Well, that's right. I think the strange thing that's going on right now is we're getting more and more optimistic about the economy. We're getting some really very good economic numbers, including the claims report this morning. But as the market goes up, of course, the prospective returns on the market going forward actually come down. So a few years ago, I felt very confident in saying we're going to get double-digit returns on U.S. stocks over the next 5 years. Now I would say we're going to get returns of about 6 to 8% per year over the next 5 years if you start at our current PE ratio. Still pretty good relative to what you get in fixed income or on cash, but it's I don't think it's as overwhelmingly positive as it was a few years ago just because stocks have gone up this much.
David, it's Julie. The problem, of course, is that we're up more than that already just for the year to date. Not even 3 months into the year, the S&P 500 is up 9%. If you extrapolated that out for the full year, you'd have a gain of about 60% if we kept going at this pace. I don't think anybody thinks we're going to see a gain like that, but if you think we're only going to gain 6 to 8%, then what does that mean for the rest of the year? We got a long way to go.
No. This is not a forecast for this year. Let me be clear. I don't think that you can forecast the stock market over a 1 year period. But what we do know is if you look at valuations, they give you very good guidance to returns over, say, the next 5 years. So, I think we will probably have a positive stock market between now and the end of the year. I think we could easily get further gains. Frankly, with interest rates this low, there isn't another game in town. I think money will go towards equities. But I believe long-term investors should remember they are long-term investors. And so, I think that it's important not to get more exuberant about stocks as they go up. I think you have to be a little bit more cautious. Just, dampen down your expectations a little bit. So over the next 5 years, 6 to 8% per year. But that doesn't mean this won't be a good year from stocks, even starting from this point. The fact that we've gone up so far this year says nothing really about the next few months. It's just the level of stocks says something about the returns you're going to get over the next few years.
Well, David brings up an interesting point about the longer-term view, because if you look at the longer-term view, it's about the macro picture in the U.S., and we know that macro picture is 70% driven, the economy, by the U.S. consumer. If you look at the consumer side of things, some of the consumer stocks on the upper end of the spectrum have not actually been performing all that great over the past year. Look at this. Coach is down 36% over the last year. Tiffany's is pretty much flat compared to the S&P, up about 11-12%. So
it's kind of in contrast to what you've been hearing about luxury.
Yes, because they're supposed to be doing better. Yeah. So, David, I ask you like the consumer stocks, but those numbers, they're not at all convincing that the consumer on the higher end are going to be buoying this economy in any way, shape, or form.
I think that's going to turn a bit here for two reasons. First of all, look at household wealth. This quarter, you ask yourself, why are the economic numbers holding in here? This is about Washington versus wealth, and we're seeing a major increase in consumer wealth over the last year, and even the first 10 weeks of this year. We estimate that in the first 10 weeks of this year, household wealth in America went up by $2.8 trillion. In just 10 weeks, because of the increase in home prices, the increase in stock prices. That helps the upper end much more than the average consumer. Also, if you look at investor confidence versus consumer confidence, investor confidence is rising more quickly. Again, that tends to suggest the upper end is doing better. So I think we're going to see a turn in that pretty soon here. And I think that upper income individuals are going to feel better about their wealth position, and that'll cause them to spend more.